Welcome to the students of class 10, parents, teachers and other viewers. Now you are in social science class. You know that social science includes many subjects: history, geography, economics, political science, commerce, psychology and others. Among all the social science subjects, economics is an important subject. Some scholars consider economics as queen of all the social sciences. Given its relevance, Indian school curriculum introduces economics from class 6 onwards in some simple rudimentary forms. In class 9th and 10th, important economic concepts, events and processes which we come across, which we keep in mind when we buy and sell, are introduced. In the previous sessions, we introduced you to the concept of money, what is money, how money is defined, what was the situation before money came into being, called barter system. We also learnt about banks. What is meant by a bank? We gave an example of a commercial bank, how the commercial banks function, what kind of facilities available in the bank, how banks are different from other financial institutions, why post office cannot be considered as a bank. I also told you that interest rate, the additional payment made by banks to the depositors or depositors to the borrowers to the banks. We also saw the situation of Salim and Swapna, how they were able to make profit or incur losses. We will continue to discuss about these credit needs, how people meet their credit needs in different ways. So, whenever we discuss the term called credit needs, one important concept you need to understand is that interest rate. What is interest rate? The interest rate is an additional payment made for the person who sacrificed his consumption. For example, when you go deposit your money in a bank, rather than consuming, rather than spending for your needs, you are sacrificing your present consumption, present need, and you are depositing in a bank. For that, the banks give you some incentive or additional payment. So that's called interest rate. Okay, that interest rate is a major instrument in the area of credit. When you borrow money from different persons or different organizations, they will be having their own terms and conditions. It may vary from person to person, institution to institution. They may be broadly categorized into 5: banks and cooperatives, money lenders, landlords, credit card companies, and then microcredit companies. You will learn more about them in higher classes. Let us look at how people meet their credits. In technical term, it is called sources of credit. What are the sources of credit? How they can be categorized? Look at the screen. Commercial banks are generally considered as formal sources of credit. We are calling them formal because everything, whatever the conditionalities they put, it is in writing. They may be private commercial bank or government commercial bank, but all the terms and conditions are laid out in written form, in fixed form. The second sources are cooperatives. Cooperatives are generally established by a group of people like the association and they register themselves with the government under the Registration of Societies Act, and they mobilize funds, and they advance those funds to the needy people. There are some cooperative societies who run banks also. Then landlords, people generally who are having a lot of land and also has a lot of assets and money, who lend it to the needy people who may be working with them or living in the local areas. The fourth category are money lenders. These people are keeping money in their hand. They lend it with the interest rate. And the traders of agriculture and non-agriculture goods. For example, in the rural areas, landlords, they possess lands and they lend it to other people. And there are different categories of money lenders. The money lenders are generally involved in lending, giving to people who are needy and charge interest for that actually. Ask your parents, are there any landlords in their area, or are they working as a landlord or money lender? You will be getting very surprising results, information from your parents or the elderly people in your surrounding. Traders are generally, they live in rural and urban areas. They have their own businesses. I'll give you one example. I already told you about Swapna. Many farmers, small farmers, laborers, particularly the farmers or the business people, small business people, they borrow from the traders, wholesale traders or retail traders. For example, farmers, it is very common, very usual to find farmers borrow money from the traders. So after the harvest, these farmers will give back the money, borrowed money, in the form of goods that they harvested. So the traders forming an important community of money lenders are the sources of credit. And then relatives and friends, some friends may charge you interest or they may not. These are the broad category of people from whom the credit may come. These are the sources of credit actually. The banks, commercial banks, all the banks that you are seeing here and the cooperative societies, they are called formal sources, and the rest, landlords, money lenders, traders, relatives and friends, they are called informal sources of credit. When people go for borrowing, when they go for credit needs, they have to meet certain conditions. They have to fulfill certain conditions. That is technically called as terms of credit. What is the terms of credit? Terms of credit requires three things. Basically, loan agreement. The loan agreement includes, in case you are not able to repay, what action he or she has to take. Many times it happens that in rural areas or even in urban areas, people borrow from banks, cooperatives, money lenders. When they were not able to repay, these institutions, they take away the materials, things available in the house. It's also called japti. You will find in the recent newspapers also that farmers, particularly the cotton farmers, they were not able to repay the loans, due to which they committed suicides. You must have recognized in the newspaper in Maharashtra or in Andhra Pradesh, in many other states also, you must have heard the cases. So it happens because of the action taken by the money lender or the lender. The documentation. When you borrow from a particular source or from, for example, a bank or from the cooperative, you have to submit certain documents. So all the procedures of meeting this loan agreement is called documentation. And sometimes you are also required to, or even most occasions, you have to submit some documents of the asset ownership. It's also called collateral. banks will have a lot of serious doubts whether you will repay or not. So they wanted some kind of guarantee. So they may be wanting your whether you are having capacity to repay. In technical term, it is called credit worthiness. You have the property documents, the ownership of property documents, for example, house ownership or land ownership or ownership of your car or whatever the things that you have in your house. And then collaterals also include fixed deposits with banks and other assets. If you are a salaried person, they may be wanting the details of your salary slip, the sources of regular income. Sometimes they will ask you bank statement. And these terms of credit also includes guarantee. Two persons have to sign in your document of borrowing or the loan agreement that if you are not able to repay, they will be taking responsibility, or at least they have to say that they know you. So these are called as terms of credit. I am sure you will be able to remember all these requirements of terms of credit. They are basically three: loan agreement, collateral, guarantee. Within the loan agreement, the details of interest rate, principal amount and repayment details. So when you meet the terms of credit, then you will be given loan. How people borrow, from where they borrow, what is the source available, what is the evidence available from India? You have hundreds of banks branches and you have people from various walks of life borrowing and lending. So what is the source of credit in India? For that purpose, Government of India collects data through a national level survey. Look at this pie diagram. In 2012, see, these details are not available for the recent years because India is a big country. You cannot collect details on a daily basis. So once in 10 years, once in 8 years, these surveys are being conducted. And things don't change so easily. So I am showing you here the sources of credit in rural areas in 2012. So if you look at the pie diagram, you will come to know that who are the major sources of money lender or credit needs in rural area? Money lenders. Who are the second source? Commercial banks and cooperative societies. So if you look at the pie diagram, you will find that the formal sources of credit accounts for nearly 50% of the credit needs. The rest of the amount or rest of the needs are met by the informal sources. That includes landlords, money lenders, traders, relatives, friends and others. You may be asking one question. Is this the situation same for ever? Last 30-40 years? Because when your grandfathers were all young, what was the situation? When your fathers were young, what was the situation? What is the situation today? For that I am showing you a table here. The first column shows the details of the sources of credit and the sources of credit in 2003 and sources of credit in 2012. What it shows actually, if you look at the role of money lenders, in 2003 they are able to meet the credit needs of 30%. Today they are meeting the needs of people by 33%. So their role has increased over the last 10 years or between 2003 to 2012. Commercial banks and cooperative societies, their role has remained same. In fact, it has declined by 2%. This is the situation in rural area. What is the situation in urban area? Though we do not have the data for the recent years, in 2002 data shows that in urban area, See, everybody cannot get access to credit. Depends on your, I already told you that your collateral, how much property you have, what is the source of your revenue, who is going to guarantee when you go for meeting your credit needs. So the table shows here that poor households, 85% of their needs are met by the informal credit sources. But if you look at the last row of the table, 90% of the credit sources are met by the formal sources like banks and cooperatives. So this is the situation in the urban area. So due to this kind of complexity that formal financial institutions are not meeting the credit needs, many kind of new institutions emerge in the country. One important institution is self-help groups. Self-help groups meets the credit needs in various ways. What is this mean by self-help group? After this, listening to this session, please ask your parents and elderly that, or particularly ask your mother, because most of these self-help groups are organized, maintained, participated by women in India. Ask your mother or any female person, member in your household, in your family, that are there any self-help groups in your locality. If you get a chance, please attend one of the meetings of the self-help group. Record what is happening there, what are the issues discussed in the meeting, who is talking, what are the issues discussed, how they are resolved. Prepare a small report and discuss and present in your classroom. Basically, self-help groups are constituted, formed by some 15 to 20 people in India. Mostly it is women. And what they do, these members bring in their savings and deposit in the bank. After 6 months or 1 year, they request banks or bank in which they have account to give loan. And the members, whoever is wanting loan, they can avail this loan from the self-help group, and then they will repay every month whatever the terms agreed upon. The interest payment or interest charges by the bank is very low when compared with the moneylenders or landlords. If I give you a simple example, suppose you borrow money from a moneylender, 1,000 rupees. If you want to repay after 6 months, the rate of interest is generally 3% per month. That means after 6 months, if you have borrowed 1,000 rupees, if it is 3%, every month, how much it will come to? 30 rupees. 6 months, 6 into 30 rupees, 180 rupees you have to give in addition to 1,000 rupees. But it is the lowest interest charge. Whereas, if you borrow from self-help group or borrow through self-help group, the bank interest rates are very, very low. It must be at best 1% or 0.75%. So since the interest rate charges are very low, the self-help groups borrow from banks and distribute among their own members, and all the money that needs to be repaid, they are given back by the members, and the respective person who is responsible for the working with the bank or dealing with the bank, they go to bank and deposit the amount. The self-help groups also serve many purposes. I already told you that more than 80% of the self-help groups and the members in there, they are all run by women. In India, a study shows that about 10 crore families are having membership with the self-help groups, and 84% of them are women. Since dealing with the bank, also requires some amount of financial details, some amount of education, and self-help groups also were formed to resolve issues, to address, to educate, create awareness on various aspects within the family, within the village. The voluntary organizations, they come forward, guide the self-help groups. So in this way, self-help groups meet the credit needs of the members. There are self-help groups which run cooperatives, which also get land and cultivate in that land actually. And there are some self-help groups which run small enterprises. They produce goods and sell it, market it. With this, you are coming to an end of the discussion on this unit, money and credit. Let us have some recap of the concepts which we have discussed in the last 4 sessions. Another 5th session, this is the last session. What are the concepts that we have discussed? Barter system, double coincidence of wants, currency and coins, definition of money, banks, net banking, internet banking, mobile banking, ATM cards, debit cards, credit cards, collateral, terms of credit, interest rate, demand deposits, credit, debit, digital payment system, and self-help groups. Let me ask you some questions. In this session, we will have a different kind of questions. I am going to give answers, but you have to develop a short answer question or any question. Let me read out the 6 answers. After some time, I am going to give you the questions also as a clue. Answer number 1, double coincidence of wants. You have to develop a question if this is the answer. Answer number 2, currency, coins and demand deposits. Answer number 3, collateral. Answer number 4, high interest rate, low interest rate. Question number 5, commercial banks and cooperative banks. Question number 6, no collateral is required to get loan. I am also giving you here, probable questions. What are the questions? Let me read out for you. Question number 1, what is the important requirement of barter system? Question number 2, define money or list items included as money in today's context. Question number 3, what is the most important requirement to borrow loan from banks or other informal sources of credit? Question number 4, fill in the blanks. Money lenders charge at high interest rate, whereas banks, cooperatives charge at low interest rate. Question number 5, 2 formal sources of credit are commercial banks and cooperative banks. Question number 6, what is the advantage of borrowing through a self-help group? With this, we are coming to the end of this session and also the end of the unit.